What's going on, guys? It's Mr. DEBT, Joe Lorick from the Money Etiquette Group, and today I want to talk about Luckin Coffee, the IPO, which is priced between $15 and $17 a share. Again, today, Friday, Luckin Coffee is releasing their initial shares for between $15 to $17 per share. And just as a side note, for anyone that's looking to buy shares today, understand that you may not see it until it's $20, $25, depending on where the market goes. Sometimes it's $30, but the initial estimates are that the stock prices are going to be between $15 to $17 a share. Now, if you want to know who Luckin Coffee is or what they are, look, of course, they're a coffee company that rivals Starbucks, especially in China. In China, they're the second largest coffee shop, the number one being Starbucks. But again, this is the second largest. They have approximately 2,370 stores as of the end of 2018, and they plan on opening another 2,500 stores. Right now, they're in 28 Chinese cities. Here's some other facts that you may want to consider. While Luckin Coffee does consider itself a rival to Starbucks, they feel that they're targeting a different demographic. Starbucks has been marketed as a luxury coffee, something that's for people who live in high society, especially in China. It's advertised as a luxury brand, not as just an everyday thing, kind of like it is in the States. However, Luckin Coffees, they're kind of marketing themselves and targeting millennials. So their coffees cost on average about 25% less than Starbucks coffees. Again, 25% less, because they're more about the tech side of it, okay? What you do is with Luckin Coffees, you don't actually go into the shop and sit around and buy a coffee with a barista and all that. No, they've designed their company so that you can order your coffee on an app and then go to the store and pick it up. And those stores are much smaller than the typical Starbucks stores. Also, you can get the coffee delivered. So they're really about using your mobile technology, using a mobile app, ordering your coffee however you want it, picking it up, or having it delivered for you. It's the convenience that they're selling in the branding. And I'll say it's even more branding because none of their coffees are proprietary in terms of their recipes, okay? Their recipes can be duplicated by anyone. So they're really trying to grow based on a brand and their concept. And it's not so much about being the best coffee company, but the most convenient coffee company, the coffee company that fits the needs of millennials and young adults and just fits with the times. Now, when it comes to their finances, last year they lost about $238 million, okay? And it had a lot to do with their expansion plans, similar to this year. By them going public, they don't expect necessarily to not turn a profit this year. In fact, in the first quarter, I believe they're just in the red by a few million. So they're doing better in their margins compared to the previous year. And you can see where they spent their money. It was a lot about expansion because for them, it's about getting as big and widespread as possible because, again, the recipes they use aren't proprietary. So they want to make sure that they deliver coffee faster than anyone else and make it convenient or more convenient to get coffee than anyone else. Now, their flavors are unique. I'm not saying that they have the exact type style of coffee that Starbucks makes. No, it's a little bit different. And some people may like it, some people may not. Some people think it's too sweet, some people it doesn't. And they're testing and changing their recipes as customers provide feedback. But again, guys, it's just a company that is losing money. It's more of a tech company, or at least half tech company, half coffee company. And they're really hedging on brand over recipe because they feel like anyone can make a coffee, and by coming in at a price range that's cheaper than a Starbucks. So what do you guys think? Do you guys know about Luckin Coffee? Have you had some? Do you feel like you would invest? Because a lot of people are looking to invest, especially at the $15 to $17 valuation. A lot of people feel like this is a company that, because it's doing so well in China, it'll translate eventually in the US. But of course, with the tariff wars and the issues we have with China now, we'll see where things go. And some people are even hesitant to invest right now because of the discrepancies between the US and China when it comes to the trade market. But what do you guys think? Are you guys planning on investing? Do you think it's going to be a wise investment come a year from now? Do you think that their model will work in the United States? Again, their overhead in terms of each store is very low because they don't make big stores, because they're not expecting you to go in by large numbers. They're expecting you to just get your coffee that's made for you, and you've paid for it, and you can move in and out very quickly or deliver it. So what do you guys think? Do you think it'll work? Leave something in the comment section. Ignore my voice because I am going through a sickness I'm overcoming, but hopefully you guys can bear with me during this time. All right, y'all have a good one.